Welcome to PyUncut, where we break down the biggest stories in tech and finance in a way that actually makes sense. Today's story is one of the boldest predictions in the market right now. Nvidia, the company that has become the backbone of the AI revolution, could see its stock soar as much as 56%, reaching around $276 per share by the end of 2026. But is this realistic? Or is this just another hype cycle in the making? Let's break it down step by step. First, let's understand why Nvidia is even in this conversation. Over the past few years, Nvidia has gone from being a gaming graphics company to the most important company in artificial intelligence infrastructure. Its GPUs are now the engines that power everything from ChatGPT to enterprise AI systems, autonomous vehicles, and even scientific research. Since early 2023, Nvidia stock has already surged over 100%, making it one of the biggest winners of the AI boom. So when analysts say it could rise another 50 to 60%, it's not coming out of nowhere. It's based on some very strong fundamentals. Let's talk about the first major driver, AI demand. The world is in the middle of a massive AI infrastructure build-out. Companies like Microsoft, Amazon, Google, and Meta are spending hundreds of billions of dollars on data centers and AI chips. Some estimates suggest that global AI infrastructure spending could reach nearly $7 trillion by 2030. And here's the key point. Nvidia dominates this space. The company controls somewhere between 80 to 90% of the AI accelerator market. That means almost every major AI project depends on Nvidia hardware. Now let's connect this to revenue growth. Nvidia recently reported quarterly revenue of around $68 billion and is forecasting even higher numbers ahead. More importantly, CEO Jensen Huang has hinted at something huge, a potential $1 trillion in cumulative revenue from its next-generation chips by 2027. If that plays out, Nvidia's annual revenue could reach roughly $379 billion by 2026. And this is where the stock price prediction starts to make sense. Because stock prices are ultimately tied to revenue, growth, and valuation multiples. If Nvidia maintains its current valuation levels and achieves this kind of revenue growth, analysts estimate the stock could rise anywhere between $270 to over $320 per share. That's exactly where the $276 prediction comes from. Now let's zoom out and look at what Wall Street is saying. Most analysts currently rate Nvidia as a strong buy, with average price targets around $265 to $270, implying over 60% upside from current levels. Some forecasts even go higher, with upper ranges touching $380 depending on how fast AI adoption accelerates. So clearly, this isn't just one optimistic voice. There's broad consensus that Nvidia still has room to grow. But here's where things get interesting. Because no story in the stock market is one-sided. Let's talk about the risks. The biggest risk is competition. Companies like AMD, Broadcom, and even cloud giants like Google and Amazon are building their own custom AI chips. These are designed specifically for their internal workloads, which could reduce their reliance on Nvidia over time. There's also the rise of ASIC chips, specialized processors that can outperform GPUs in specific AI tasks. If these alternatives gain traction, Nvidia's dominance could slowly erode. Second risk, valuation. Even after recent adjustments, Nvidia is still trading at a premium compared to most semiconductor companies. While its forward price-to-earnings ratio has come down, investors are still betting heavily on future growth. If that growth slows even slightly, the stock could face sharp corrections. We've already seen hints of this. Despite strong earnings, Nvidia's shares recently dropped as investors questioned whether the massive AI spending cycle will deliver sustainable returns. Third risk, macroeconomic uncertainty. AI growth depends heavily on capital spending by big tech companies. If economic conditions tighten, or if companies start cutting budgets, AI infrastructure investments could slow down, directly impacting Nvidia. And finally, geopolitical risks. Export restrictions, especially involving China, could limit Nvidia's market access and growth potential. So where does this leave us? Let's bring everything together. The bullish case is clear. Nvidia is the dominant player in a once-in-a-generation technology shift. AI is not a short-term trend. It's a long-term transformation, and Nvidia sits right at the center of it. The company has strong revenue growth, massive demand visibility, and a powerful ecosystem that is difficult to replicate. That's why projections like $276 per share are not unrealistic. In fact, based on current analyst consensus, it's right in the middle of expected outcomes. But at the same time, the market is already pricing in a lot of this optimism. This means Nvidia stock is no longer just about growth. It's about execution. Every earnings report, every product launch, and every AI investment cycle will matter. So what should investors and viewers take away from this? Here are the key takeaways. Nvidia could rise to around $276, implying roughly 56% upside based on current projections. AI infrastructure spending could reach nearly $7 trillion by 2030, creating massive long-term demand. Nvidia controls about 80 to 90% of the AI GPU market, giving it a dominant position. Analyst price targets cluster around $265 to $270, with some estimates going as high as $380. Revenue could reach nearly $379 billion by 2026 if growth continues at the current pace. But risks from competition, valuation, and macro conditions remain significant. In the end, Nvidia is no longer just a stock. It's a reflection of the entire AI economy. If AI continues to grow as expected, Nvidia could absolutely hit or even exceed these price targets. But if the AI story slows down, Nvidia will feel it first. So the real question is not just where Nvidia stock is going, it's where the future of AI is heading. And that's the story we'll be watching closely. This is PyUncut, breaking down the future of technology, markets, and money, one story at a time.